Good morning, everybody. Today is Friday, March 3rd. It is about 8:45 a.m. Getting started a little bit late, so I'm sorry about that. I have up on my screen here a real basic outline of what the morning preparation is all about. Okay, I'm gonna run through it real quick. Um, First thing we do is check news. We look at overnight inventory. We look at what the trading how trading was overnight, if we're long, short, or neutral, meaning how much of the trading happened above or below the close of yesterday's pit session. Are we opening in range or out of range? Excuse me. Is there a gap? And are we opening in balance or out of balance? Then we draw our overnight high, overnight low, previous support, previous resistance, and we adjust these, the previous support, previous resistance. Some of those we remove, and then some of them we add, like the current day's low and high. And I'll add more details to this document. We draw previous VPOCs, previous microcomposite VPOCs, previous microcomposite value area high and value area low. Let's also make that in here. Okay. And the rest of this I'm not going to really pay attention to right now. That'll be for another day. Let's look and see what news we have coming today. 9:45, we have PMI, which means we also have it at 10, and we have a Fed member speaking throughout the day. So could be some chop. Could be some chop. We might run into some quicksand this morning. Let's take a look at moving around yesterday's value area high, value area low, and VPOC. So here is one.
Hey, Eddie.
Hey, what's happening, Billy? So I just sent a link to a document, just to kind of go over what the homework will be. And I think what we'll do, I do want you to be the one doing this, but I think first you and I will do it, um, ourselves. So just to make sure that you're able to move the stuff on the screen like I want you to be able to, because we never actually tried that. And I don't want to mess anything up. But right now, what we're doing is moving levels from yesterday. So here is, I'm putting this large red dotted line goes down here for yesterday's VPOC. And we're going to go get and find the other large blue dotted line, which is yesterday's value area. And as usual, NinjaTrader strikes again. It has taken away my. All right, let's see. Fine, we'll just make a new one. Man, that's annoying. Oh, never mind. Sorry, they're already both down here. Good job, me. Okay. Now that we have those from yesterday, let's go look at overnight trading. And here is overnight high. And there's yesterday's overnight low. Okay. Let's look to see how we traded as opposed to the close. So here is the close of day from Thursday's pit session. We did a little trading beneath it, but almost all our trading took place above. So we are net long in inventory. Remember, the general rule of thumb is if we are net long, our expectation is that we have the idea that we might correct some of that throughout the day and look to come back towards yesterday's close. We are opening what's yesterday's high of day. Yesterday's high of day 53.25. We are opening at 52. I'm sorry, yesterday's low of day 52.57. We are opening 52.80. So there is no gap according to the current open. So we're opening inside value. Inside range, but not inside value. And I'll show you that in just 1 second. Let's bring in our homework chart now, our hourly chart. Let's check to see if there are any levels that we blew through yesterday, and there are none. We didn't have any swing levels down here that we got through and left that we want to remove, I should say. So we are going to add a swing level at yesterday's high. We always mark off the high and low of the day before. We're going to add another swing level at yesterday's low. Remember, horizontal, the lines that are just dashes are previous swing levels. I don't care if they were a high or a low. The lines that are the larger dots, red are always VPOC, blue are always value area high or value area low. The lines that are dash and dot are micro composite, value area high, value area low or blue. Red is VPOC. The lines that are this orange solid are overnight high, overnight low, and the solid green are low volume node. I'm sorry, high volume nodes from the composite or the micro composite. And I also sometimes will put a solid red line that are low volume nodes. And I'll write up a document for that too, just so that you guys have a reference. But listen, there's nothing hard to remember there once you see it a few times, and it helps tremendously when you actually start watching the charts. All right, so let's take a look. Let's adjust here. You can see this V. So we are inside of the microcomposite range. Microcomposite range comes all the way down here. So we are going to further drag our microcomposite. We're going to include yesterday's trading in that range. And we actually have two microcomposites here that we're monitoring. We can see the value area low has shifted. So we're going to put it on there accurately. So this is hovering now over yesterday's value area low. VPOC has stayed the same. We can see our line drawn on it nicely. We can see microcomposite value area low is good here. Oh, hang on. Sorry. Looks like the second microcomposite didn't move. There we go. Okay, so that matches up. That matches up. Let's see. VPOC matches up. And I'm just looking here. I'm looking to see if the VPOC I have drawn is actually off by a tick now. So let's get that swing out of the way. Okay, good. You see there's actually two VPOCs here. There's a daily VPOC that you can see kind of hidden behind this yellow, and this is the microcomposite VPOC. So we're lined up good there, and this swing was actually down here. So let's put that back. Let's check our value area high for these VPOCs. I'm sorry, for the microcomposites. This one has shifted down here. And I actually don't see the other one. The other microcomposite is further back here, so let me just scroll back to find it right here. And this is I don't have the remote. Mommy got it. Okay, so now our lines are drawn on here more accurately. Okay. Now, let's take a look at where, and I'm not planning on doing homework for the S&P today, so that's why I'm taking a little longer with this. I'm not too worried about it. 52.83 is where we're currently trading. So let's mark that off here. So first thing we look for is whether or not we are trading in range, in balance. So in range would mean that we are trading inside of yesterday's high to yesterday's low. All right, and we certainly are. So 52.83, we are right in here. Not only are we trading inside yesterday's range, we are also trading inside yesterday's value. Meaning, sorry, my pen's not working here. Let me fix this. should do it. Meaning that we are opening in. Oh yeah, it's a little thick there. So when I say we're opening inside yesterday's value, we're opening within the value area of yesterday. Okay, so 52.87 ish. We're actually opening almost exactly at yesterday's VPOC. So our first expectation is going to be, I'm sorry, we're opening at a former VPOC, not yesterday's VPOC. Our first expectation is going to be an open push towards overnight high, break of overnight high, push towards yesterday's value area high, chop around, push towards high of yesterday, find some resistance up here, look for an opportunity to get short and bring us back into yesterday's range towards, I should say, back into yesterday's value area towards yesterday's VPOC and maybe chop around here and ultimately look to test this high volume node, same high volume node we were targeting yesterday. That's going to be hypothesis number one. And actually, I think I set it up so that I could take pictures easily. Good. All right. Hypothesis number two is going to be open and chop. Just kind of hang around this former VPOC, move up to test overnight high, maybe get as high as value area high, fail, come down to test value area low, this high volume node, see if this will hold pretty well like it did yesterday. And then at that point, we'll see if maybe we make a move towards mid or this VPOC where we would have consolidated at the open and then look for failure with an effort to break down below toward testing overnight low. So I'm calling this hypo 2, but I'm going to continue to write here. So give me a second. The reason for that is if this is most likely, this is a pretty decent move for the morning. If I were to get into a short trade, if it sets up for some reason that we get to go short, maybe on a pullback towards the high volume node, or even a further pullback with negative divergence. If we get to go short and we can get below what is currently overnight low, we got room here to fall. All right, so this will be one of those things where we always talk about how every day the exact same, we don't always talk about it, but every day the exact same setup can be treated differently in our proper targets and stop losses. So if we are able to get into a short and we see that we're coming and testing the low of day, which would be, let's just say, near overnight low, we are going to look to have one of our proper targets kind of laid out there pretty far and trail it with a stop, and we'll talk about it if that actually happens and we're in front of the screen to do it. So that's going to be hypo 2. Hypo 3 is going to be an open with chop, push towards yesterday's low, towards the high volume node, see if we can't chop and hold, and then look for a push back up, testing overnight high, and then we go, basically at that point you're back to the hypo 1 scenario. Remember, we are looking at this area right around yesterday's high, with this zone for a potential reversal, because we would that point be staying in the lower end of this distribution. If we get above yesterday's high and stay there and put in some volume and get some good long opportunities, then the expectation is going to be to trade up towards microcomposite VPOC of the distribution above us. All right, that's going to be expectation number 3. So that is going to be it for morning expectations. Let's see how much time I got before the market opens here. Not bad. About 1 minute and 40 seconds, so that worked out nicely. Let's just go here.
Hey, what's up? I'm just gonna hang out and watch. All right.
All right, cool. Yeah, I saw you on there. I figured you'd get to hear my sultry voice. Yeah, let's see. All right. So let's take a look at what we got here. Overnight high right now. Sorry. If we take a look at overnight high right now and we look at where we're currently trading, let's take a look if it looks like we would have negative divergence on a move back up there. It's tough to tell. The 610s definitely made a push, but 987 not the strongest push down there, and the 1597 really no push at all. So we'd have to kind of wait it out. I'm not bothering with opening of the day trades. I need to really kind of throw those out the window for now. So right off the bat, we see we're pushing, testing yesterday's value area low. We came down a bit before we actually got to the open. We were drawing our open at 83. We had come down to 75. So here we go, coming towards yesterday's close and yesterday's low. So we're going to start paying attention down here. Right beneath us is that high volume node from the composite. Sorry, we're actually at that right now. So we need to start paying attention. What's going to happen? What's going to happen here? You know, is this high volume node and the levels below it going to hold and give us a long opportunity? Or are we going to get below here and start setting up for a short and start treating this high volume node as resistance? So let's see where we pushed down to. So we came down pretty much to the high volume node, have turned up from there. So we're watching here for at the current low of day. We'd start watching for a potential long. Not yet. There's no divergence on the BBs. It hasn't had the time to set up. Let's open this up a little bit. We do see a little bit of consolidation back here right before we open, so that might be an interesting opportunity to potentially go short into. Right off the open, BBs are pointing straight down. If you look at those BB charts, you'll notice the white vertical line. There's two of them. One of the crosshairs, but the white vertical line that is further to the right on all those charts right now represent the open of the day, the open of the pit session. All right, so a lot of times you'll hear me talk about the BBs since the open. So that's the reference that we're looking at. So we're just kind of hovering in this area that we're looking at as a decision point here for us, because we really don't know. We really don't know yet if we're going to be holding this area and making our way back up towards the upper end of the distribution that we're in right now. Let me show you what I mean. Just bring this back in. Currently trading right here. Okay, we're dead middle of this distribution. Not the best place to be taking a trade unless you have more context, and right now we don't. So we're kind of going to have to wait for the first move to try to let the market, try to let oil kind of tell us what it's going to do. Remember, would not be surprised to see a choppy range-based trade this morning because of all the Fed members yapping today. But if that's what happens, we'll deal with it. If that's not what happens, we'll deal with that too. Definitely looks like we're weighted to the downside here. Just so that because we have the time to talk about it, there's really not much going on here. I just so you know, right now, I would be okay looking to take a short if we take a move back up towards value area low, yesterday's VPOC, and current high a day. I'd be willing to scale into a position here. Depending on how it's set up. But right now, if we had a move back up, I would probably be okay with taking a short there, but with a very, very tight stop. It's a little, That's actually a little earlier than many of the trades that we make. But I like that we've started below VWAP, staying below VWAP. Definitely, we see the trading has been weighted to the downside. Would be a little early, though. I'm watching the order flow here. I'm watching to see as we come up and we trade, are the offers adding back on size like they just did, actually. I'm going to take one contract here. Okay, and like I said, I'm willing to scale. I'm willing to scale all the way up into overnight high with a tight stop there. So I'm going to add in a price here. Let's look for one more. At 75. No, that's 74. And I would be willing, not really a big fan of scaling 2 ticks. You know, like if I have an order here at 75 and I want to put another one in at 77, that's not really, to me, that's not really worth it. At that point, I'd rather just get my fill, take 2 on here at 75. But now, keep in mind, right now, what I'm looking for is I'm looking for the BBs to remain fairly negative. I don't want to see large rollover towards the upside in the BBs. If we see large rollover, well, a couple things. One, we will not add in the third contract. For now, we're just looking to take on a second. But if we see really large rollover, meaning just in consolidation, if we stay in consolidation here, and we see the BBs just react really strongly, we'll most likely close our trade, because at that point we don't have the expectation to break low of day, current low of day, former VPOC. And right now our goal is to test yesterday's low. That's what we're shooting for at this point. But for now, the 610 rolling over, that really doesn't tell us much. We know that if we were to make a move down right now to current low of day, the 610 would make a move right there with us. We would not have positive divergence. 987 and 1597 have not rolled up at all. We've really come to a dead stop right around VWAP here. It's a little early. It's a little early for VWAP, but I would, no matter what time of day is, I would rather be on the side of VWAP that is in the direction of my trade. So the fact that I'm short, I'd rather us be on the underside of VWAP and staying there. And right now, just for the fun of it, I'm looking at the order flow here, and let me make this a little bigger. See if I can't show you guys what I'm talking about. So what I'm looking at is currently we're trading. Okay. Currently we're trading right here, 52.70, and there are 75 contracts on the bid, and there's 183 contracts or ticks in this candle. As this number goes down, what I look for is I want to see people on the bid leaving. I want to see the number on the bid decrease, and then ultimately the bid drop away, and then the offer price come down and push price down. Which is the opposite of what's just happening right now. Now, this is a microscopic view. It's very easy to get caught up in this and say, oh, right there we had a refresh on the bid. Oh, no, this is no good. Or we had, like right here, the offer came down. Okay, yes, now we're going down. No, it's very, very microscopic. But there are times that there's some information pops out from here. If you're watching it, there are times that it really comes in and helps. You can see a big sell order just went off here. 20 contracts. As in one trade in oil is a large sell order. You can see right now we have 23 contracts on the offer. I want to see this number go up now. I want to, not that. So there it went to 0, but came back up to 15. And now that offer went away and it's become bid. Now it's back to offer. Now there's nobody there. Now it's bid. So, at a microscopic level, you'll drive yourself fucking crazy just staring at this. But anytime we have a lull, I try to use this because this is probably the one thing that as you guys get to learn this better, and you'll hear, and if you watch videos and read, you'll hear about order flow, and it's probably the hardest thing to get to watch in real time. And if you don't understand it, actually, Forrest, this should be right up. This is everything we used to do. It doesn't have the same meaning it used to, but when you see absorption, which is really what I look for, when you see somebody on the bid continuously refreshing their size, no matter how many times that people are selling to them, when you see someone on the bid refreshing their size over and over, that is something I try to keep an eye out for. They actually have softwares out there, with NinjaTrader, they're called indicators. They have indicators out there that keep track of how much volume traded, different than the volume profile. The volume profile of the day will show you how much volume traded at each price since the open of day. They have software out there that the candles are drawn in the bid versus ask volume, and how much volume traded on the bid, how much volume traded at the ask, and that's a nice way to keep track of anywhere there might have been some absorption. All right, so we're not right now. There's really nothing for us to do. If we come towards lower day, no doubt we do not have positive diversions on the 1597 and the 987, and like I said, it looks like we wouldn't even have it on the 610. Now, we did not have a 10-tick profit target yet at the low of day, but that's okay because of how early in the day this is. There just hasn't been enough time in the day yet to set up. We don't even have a 10-tick range on the entire day. Right? What's our low here? 60, 66? I'm sorry. We have an 11-tick range on the entire day. So taking a short this early in the day without having a 10-tick profit target, that's a little bit different. Normally if we're waiting our 15 minutes and we're trying to get into a contract, we always want to have a 10-tick profit target at least towards either the high or low of day. Right now, we're pretty much doing nothing. But as long as we can stay below VWAP, I'm okay. As long as those BBs don't roll up, I'm okay. I only have one contract on this trade, intentionally keeping risk low right now. And to tell you the truth, I would be potentially losing interest in a second contract here. I guess we really have to see what those BBs do. At this point, I really don't want my second contract. I would have loved it in this initial push up, but I'd really like us not to get back above this, micro double top here, value area low of yesterday. I'd really like us to just start putting some weight down, letting some sellers step in. I would believe that if we cross the low of day right now, I would believe that you're going to have some orders resting below here saying that if we break below, other people want to go short, and you might see a large order tick off, like you might see a 20 or 30 order, and that could potentially give you a little bit of an extra boost to the downside. We're going to get a little greedy for now on our only contract, because if we go down, okay, I'm not saying we will, but if we go down, I'm going to want to see what happens as we push towards lower day. If the BBs are still showing as negative as they are right now, I don't really know that I would be all that interested in closing my trade down here. Also, I'd be watching if we can push towards overnight low. But if we do that, there's a big sell coming in there. 31 contract. Okay. Generally, large contracts mean large traders. Now, look, they're not always right. They're human too, but it is always nice to see large order size go in your favor. That it does not always mean that it's going to be right, but if you had the choice, would you rather see more pressure of people selling when you're short or buying when you're short? It's fairly obvious. I'd rather see people selling when I'm short. But right now, there's really not even anything to read from order flow. Every price level is being contested. I'm sure if we look what the volume has traded so far today, it's going to be fairly low compared to most other mornings. Again, that in my opinion has something to do with the Fed speakers that are coming up. You could see the 610, no positive divergence, 987, 1597, certainly no positive divergence as we're close to the low of day here. I do not know how I feel about a second contract here. The longer we consolidate, the more likely those BBs are going to show positive momentum. Like you see how the 610 has got a slight upward slope to it. It's only the 610 for now. But the 1597 is flattening out, which again makes sense because price is flattening out. But that would actually put me in the position of saying I don't want to get into a second contract here because if we continue to consolidate, these BBs it looks like will turn up. So at this point, I'm willing to stay into my trade with my risk being high of day where, I'm taking an 8 tick risk, but only on one contract. Right, there you go. So that's why I did not want a second contract there. Now, with a move like that, excuse me. With a move like that, I am still interested in potentially looking for a short. But look what happened here. This setup, this move to the downside, and then hold at the high volume node really reads more along the lines. What is going on here? Really reads more along the lines of we've now tested this high volume node. We've tested this former VPOC as we saw happen yesterday at the open, and then we push back up. So we're going to just kind of take a seat on the sideline for a second. So nice ability there to stay out of getting into a larger position. We're watching. Remember, I was showing you we had this consolidation in the overnight session. Didn't we see a big sell? Oh, okay. So look. So what has happened here is we had some large sell orders and some large buy orders, but more buys than sells, which is why it's green in the in the background. There's another sell stepping in. We're right at overnight VPOC, so not an area that's surprising for us to see the slowdown. More sellers stepping in, but as these sellers are stepping in, you can see prices not going down. Prices staying up here, where there are people buying and absorbing these orders on the bid. And right now, that's kind of what I'm watching here. I don't buy breakouts, right? So even though this looks like it may be building up some energy for a breakout, I will not buy the break of this high. I don't know if you guys can hear that, but Maximus is out there making some sort of noise. Maximus, please don't let the cats in, okay? Thanks, buddy. Sure, take your time. Definitely looks like we have absorption here. It looks like we're going to make another push up. We do have negative divergence here from the open of day to now. If you look at all the BBs, there is negative divergence on every one of them. So we're just not at a level that I'm all that interested in going short. I do like this consolidation back here. I do like that we're sitting at overnight VPOC. I am actually tempted at looking for another short opportunity here. But I really I'd like us to get up further into the consolidation point of overnight, somewhere back here, somewhere in this area here. And it is, again, no doubt we have negative divergence from the open, and we also look as if we would have negative divergence from this former swing high from overnight. But on the flip side, we are seeing buyers hold price up here. Even though we're seeing large sell orders come through, we're seeing prices not able to go down. Buyers are definitely absorbing all the orders coming at them. Excuse me. Right there, we we just saw the bid raise by 30 contracts. Actually, the offer just did the same thing. Excuse me. Another stalemate here in price. I'm not going to be surprised to see more large sell orders come in up here. I know I'm not the only person looking at this. But we're seeing absorption on the bid here. We're seeing that as sellers are trying to hit the bid, we're seeing people continuously fill those orders and stay at the bid. Yeah, there's one of those big sell orders I was just talking about. I'm not surprised to see that. And I actually understand completely why. It's just that we're in this no man's land of levels. As much as I would like to be short right now, I really think I'm going to need to wait to see what we do as we get further into this consolidation. So we did spike up there a little bit. Large buy order here. I gotta tell you, I'm kind of surprised by that. It's an interesting place to take such a large order on to the long side. I don't I don't see what they see. Not that matters. I mean, when there are people that read order flow here, like the stuff we're looking at, but they use what's called that footprint, the other chart I was talking about before. And they might have seen something from there that they're looking for a 3, 4, 5 tick move. So there's whether I understand why they're doing it or not is irrelevant. But I always like trying to think like another trader. Because most of the other traders are wrong. So I like trying to figure out what is it that they thought they saw. Really here, as we saw this holding the high volume node and large sell orders come in and price not really breaking, this you could have actually looked to scratch your trade here. I'm not too upset that I didn't. In fact, if we were to be scaling in, we'd actually still be short right now. But I closed my trade where I did because I know I can get back into it at either a better price or very close to where I closed it. I assumed, I should say, that I'd be able to get back into it at either a better price or right around where I closed it. I do still think that this is going to turn, but currently we are trading above middle of the day. We're trading above VWAP. I would like to see a more clean setup for us to get into a trade. You don't just want to force yourself into a trade. I would also tell you right now that with a pullback, we're gonna watch the BBs and see if we're going to turn this into looking for a long opportunity. Our range is so tight right now. The first trade that we made, and actually, you certainly can argue that our first trade was made too early because when we got into the trade, we didn't have our 10 tick profit target to the downside. Because of that, I only took one contract instead of trying to get all three. And so same at this point, the same thing is going to come into play, but I won't even take one contract. Now that we have traded over 20 minutes and we have such a tight range here, 66 to 82, in order for me to look at something as a reasonable setup, it's going to have to happen at one of these extremes where I have more than a 10 tick profit target before getting to the other extreme. Excuse me. Once again, absorption happening at the bid here. Not many contracts going off. You can see that yellow number, that 159, not shrinking by too much. Another 4 contracts, another 9 contracts, and you can see how this bid, that bid was staying there kind of strong. That bid was real. I'm curious now what's going to come of that. There's your big buy here. See how fast that bid just filled back up. 137 contracts, 100 contracts, now 100. So it's pushing up. That volume is pushing up as price is pushing up. Now it's disappeared a little there. Excuse me. Again, no surprise in the tight range. We kind of expected this. PMI isn't out till 10, if I remember right. Let me just pull that up. Yeah, PMI isn't out till 10. We have the first one at 9:45. There's 2. They released one at 9:45 and one at 10. Although I don't think that's what the slowdown is today. I really think it's because of all the Fed talks today. I don't know why the hell I can't clear my throat. So again, we've kind of just gone to nothing here. And if you take a look over the volume profile, you could see in this consolidation, we built up a high volume node. In this consolidation, we built up a high volume node. In this consolidation, though, we see a real clear low volume node here, which could act as support. And then, of course, we have a low volume node once we get to the high because we spent almost no time there. Just kind of sitting and waiting. This is what most trading looks like, where you are waiting for your opportunity, or you're in a trade and you're waiting for something to happen. It's not often that you are looking to engage in the market. And this is, for me, the hardest skill that it took to learn. Even my trade, even the first trade this morning was early, but I did like the idea, and I still do if we ultimately get below this high volume node. I really like the idea of getting past yesterday's low and what is currently overnight low. If we can get down below here, I really think we have a bit of a free fall ahead of us. So that was completely my reasoning of wanting to take that short. We had a decent trade entry. We easily could the trade went in our favor. I don't know what it was, 3-4 ticks. We could have easily scratched the trade when we saw absorption on the bid here. When we saw the high volume node holding a support, easily could have scratched the trade. I chose not to. I was willing to give the current, at that time, the high of day, the opportunity to play itself out. Overnight VPOC, a chance to hold as resistance. But right now, we gotta wait. The only trade we could take from where we are right now, as far as I'm concerned, is a short until we have a decent sized pullback, so that we would have a 10 tick profit target. you can see not only do we see congestion in price action, but you could see volume building up here. I mean, of course, the high volume node, the VPOC, makes that real obvious. But you can also see large trades happening here, and they're happening in both directions. So a lot of indecisiveness right now. Just to take a look down at the BBs, no negative divergence happening right now. Every time we trade towards the upper end of this consolidation level, the BBs are flat to positive. There's our 930. There's the equities open. You know what? Shit, I'll tell you what. I might have to. I didn't do the homework on the ES, so I can't really mess around with it. Darn it. I wasn't expecting this much of a lull in oil. I guess I could have done the homework while we've been watching oil here. My bad. I'll tell you what. I'm going to move some lines around on the other chart, on my homework chart right now. And then I'm not going to really bother forming hypotheses. But I'll tell you what, the ES right now, we're opening in what was the large gap zone, which I'll show you in a minute so that you'll know what I'm talking about. Just come get these. In the meantime, oil is just kind of hanging out. This pullback to the VWAP is not far enough for us to be looking for a long here, because if you get into a trade, right now we're trading 75. High a day is 82. Only 7 ticks to the high a day. Not enough for us to want to get into a trade here. And range bound market like this in the morning, that is exactly what happens. You get into situations where you just can't make a trade. So ES, right now I have my lines drawn out from yesterday's current overnight high, overnight low, yesterday's value area low, value area high is above us quite a bit, and yesterday's VPOC. You see this huge gap zone we left from here to, I have to draw in yesterday's low. Let me do that right now.
Oh, wait. Revo, how did you get in here?
That would be right there. That's my wife talking to a cat. She does that. All right, let's see. So if we could get below yesterday's low of day, now we're talking about some short opportunities for the ES. You could see the large volume area here in yesterday's profile with a second distribution up here. So for the first day in quite some time, we are willing to look at some short opportunities in the S&P. All right, now the other side of the S&P is if we see yesterday's value area low begin to hold as support, if we see yesterday's low begin to hold as support, then we start watching this for a long, and what we're looking for is, so what I'm saying is if we see down here begin to hold as support, and we would see that because it would be a retest of that area with positive divergence. That's what we would use as a reference to say support or not. At that point, what we are looking at is a push up, since we would be getting into yesterday's value, a push up towards, value area high of yesterday. If we get to that, we would want to see what the BBs look like at that point. Certainly, we're going to have to pay attention to this swing high from yesterday, see if that potentially acts as resistance. And if we get above there, shouldn't be anything holding us back from getting to yesterday's value area low. And then if we get above there, the way the S&P has been, we get above there, really wouldn't be surprised to see us blast all the way back up to current all-time high. Meanwhile, oil is doing nothing. So we are going to focus our attention on the S&P. We are currently looking for a long opportunity, looking for long at pullbacks. On the S&P, we're watching for 8 ticks in our first profit target. Let's see, we're getting a pullback here. Getting a little pullback here on crude. So let's actually pay attention to that.
I can't believe how tight it is. Crude. It's in the 10-cent range.
I know it's just this is very, very tight. And here, you know, like what we've been saying, you just kind of got to sit and wait. Hopefully the S&P gives us a setup. We just came to test overnight high to the tick. That turned down, so we're watching for one of two things. So again, we need a pullback of more than 8 ticks, because in the S&P, our first profit target is 8 ticks. And S&P is quoted in quarters. Minimum tick size is a quarter. So basically you're looking for 2 points. So 23.82, the pullback would have to come down to 23.80 or lower before we start being willing to try to get into a trade here. But the fact that it died right at overnight high, we would be watching if we get a pullback and then we turn back up towards overnight high. Let's say we get into a long somewhere, you know, maybe in this consolidation here. Maybe we pull back to there and we want to take a shot to go for a long. As we come back up, if it goes in our favor and we look at oil. Hang on one second here. So no negative divergence on this move up right here. We came back close to the consolidate. Technically we are in this lower consolidation. I'm looking to see if we could have gotten above there, and you can see how it just got back up there and failed immediately. But no negative divergence there for me. So not enough for me to want to take a short there. So if we pull back in the S&P enough to get us into a long, what we would do, let's just look at it. Let's just say we were long right now. We would watch to see as we come towards the high of day, are the BBs showing us any? Oh, oil just blast right through. All right, so let's go back over here for now. So currently sitting at the swing high from overnight, we do have negative divergence there. We actually have it on all 3 charts. This could be a good trade opportunity here. In fact, I'm going to take my first short here. I'm not taking more than one because this could very easily. I actually got filled up here, so that works out nice. This could very easily turn into what just happened. We no longer have negative divergence. I'm closing my trade here. I'm not sure why it didn't, but it will in a second. So we're going to close that trade at scratch. I don't care if it comes back down right now. My reasoning was negative divergence off of the swing high from back here. When we ticked through the way that we did, we lost our negative divergence. So I will close my trade. Now, what we're looking for, hang on, let me turn this off on the S&P. Okay. What we're looking for here, and I'll bring in our homework chart in just 1 second, so we'll do that. Let's see where we're trading. We're coming up towards the upper end. We're coming up towards the upper end of this distribution here. So if we get up a little further, or even where we're sitting right now, even this microcomposite value area low, if we see negative divergence up here, we would be willing to treat it as an opportunity to go short. The flip side is if we could get above this 53.12 area, somewhere in this range, it's a low volume area, not one particular price. If we can get above there and start trading and see that turn into support, remember then what we're going to be looking for is a move back into this distribution, and we would expect a test of microcomposite VPOC. So let's see what ultimately happens there. So right now, we would be okay with a setup with negative divergence, looking for a short opportunity. Because of this extended move, we now have enough room that we can get a pullback, we can get some type of pullback, and give us an opportunity to potentially go long with more than a 10 tick profit target. Meanwhile, on the S&P, as crude continues to go up, right now there is no trade opportunity for me. On days where this certainly has not been this kind of day, but on days where we do this, there's no trade for me. Where we don't get a decent enough pullback that we can use a level, there's really no trade there for me. All right, now here's a nice pullback. Current high a day is the whole number, so 52.90 gives us that 10 tick potential profit target. We got to watch overnight high as potential support. I'd like this to come back a little bit further. Let's scrunch this chart up so we can see. Again, this would really be what's currently the middle of day would really be where I'd start wanting to get into a long if we can pull back down there and set up nicely. Take a look where we had this consolidation, this happened fairly quickly. Even though we see a lot of bars here, remember, my candles are formed by volume, by 610 ticks each candle, not by time. So we see a lot of candles formed here, but we know that all happened fairly quickly. And look at how much volume we put up there right away. Usually that tends to mean we're going to come back up and retest it. There's our high volume node that we expect to act as a magnet. So right now we're watching to see if we can get a pullback with a potential long opportunity, or if we form, we see the 610 rolled over, 987 rolled over. If we get a little bit of consolidation here, and remember, consolidation doesn't have to mean that it takes a long time on our charts. It could just be volume. But if we get a little bit of a consolidation here and a move back up, we might get that negative divergence that we look for before getting into a short trade. You got people up here trapped right now. All these large buy orders up here, they're trapped. They're long right now, and at some point they're going to have to liquidate their trades. Some of that I think has to do with this little quick burst down here. I think is some of that, but there's definitely some trapped traders. So here's a nice little pullback. Big volume just showed up on the offer here. Ultimately, the short we got into would have worked out. I don't care. My reasoning was gone. Some of you, if you did it the way I did, where you say, I'm going to take my one contract and use that as to start building my position, you certainly could have stayed in your one contract. With one contract, you have 30 ticks of risk for $300 total risk. You certainly could have stayed in your one contract and been in this move. For me, that would be a negatory. Right now, overnight high really is the price to watch. We traded through it and put some trades on above it, but it came right back down below. So with the way that we're seeing this, with the way that we're seeing the BBs turn down, what we might end up getting a chance to do is we might end up getting a chance to get into a long with a move back up where we start scaling out of our trade and a turn back down if we can see the negative divergence on those BBs, which I don't think would be the case yet. I think if we were to make a push back up towards the high, we would no longer have our negative divergence, which is why I'm still looking for the potential opportunity to get a long here. Bids are starting to hold now as we're trading at the bid. They're starting to add back on contracts. Just happened again. just happened on the offer now. So again, we're kind of getting into a stalemate situation here. You can see the S&P is also just completely flattened out. Big bid just stepped up at the same time as this order got filled. Big bid just stepped up again. There's another one. Oh, now here come your sells. It's amazing how you get both sides of this so often at the same price. How people see the exact same thing completely oppositely. Just didn't get a pullback far enough. Now, as we're coming up towards these highs, we do have negative divergence. So we're putting our first order in here to get into a short. Uh, 610 and 987 are showing negative divergence. 1597 does not. Remember, 2 out of 3 for us is completely fine. If we were to continue to push down here, though, if we get back towards middle of the day VWAP, this former consolidation area, I'd still be potentially looking for a long. Not that I would expect that long now to come and bust through the current high a day, but there's still a fair amount of room to come back up and test the high a day. I would really actually rather be down towards this VPOC. Look at these low volume nodes here. That clearly could hold a support. It already has. I actually didn't see that. We might factor that in here as well. Another large buy going off here. Big offer just came in. Big offer came in at the market. That's when it means more. When the huge sell. Wow. So that whoever was coming down really needed to get that trade off. That's what that is right there. That's interesting. And you can see, again, we're talking about microscopic stuff here. You know, when it happens and it moves a tick or two, that's for one person to cause that to happen is a big deal. In the grand scheme of things, it's nothing. And this is when you guys hear me talk about the volume you could trade when you get consistent. You know, trading 20 contracts here is absolutely nothing. 40 contracts is pretty much nothing. Really considering, whoa, let's take a look here. What's going on in the S&P? Coming back, testing the open of day here. You know, I'll tell you what, we missed on the S&P here. No, we didn't. Never mind. We didn't miss anything. I stand corrected. That big sell order here. That's you know, again, not a surprising area for it. We've been sitting in consolidation. A lot of people place orders on the breakout, which I was saying I never do. But that's what that is. There's a breakout of the consolidation. People think it's gonna break out and then push further down. Make that S&P a little easier to see. Okay, strong bounce here on the oil. Right back into that consolidation area. Yeah, well, one of the reasons one of the reasons I talk so much is just because I do. But one of the reasons I talk so much when I'm watching the trading is because I like to hear my reasons. Why I'm getting into a trade, so that as I continue to talk, if I, let's just say I say, okay, I'm going to get into this long because VWAP and middle of the day are currently converging here. We're back into this old consolidation and I have this swing high as support. Once we get down to that level and I see something change, it's just easier for me to be able to hear myself say it and then react to it. That pullback on ES was kind of nice. We are getting negative divergence on the S&P as well on the 1597 and 2584. We do not yet have it on the 4181. So we do have 2 out of 3. Remember, I am more interested at this point in longs on the S&P than shorts, just because we continue to be trading at all-time highs. But today is probably the first day where I would more aggressively be willing to get into some short opportunities. And actually, up top here, we have overnight high. But there's really nothing else up here because we haven't spent enough time trading up here to create levels. So your trades have to be all in. Whatever risk you're going to put on, 1 contract, 2 contracts, 3 contracts, you really need to be all in near one of the extremes with tight stops, because if it gets above that extreme, it could really push and push quickly. Once again, we have just come to a screeching halt here in oil. And you have to be careful, because as you watch this consolidation, I'm sure you watch it and say, oh, look, it's coming down. Okay, this looks like a short. Oh, no, it's turning back up. It looks like a long. And if you were watching me trade back in January, the early part of January, that's exactly what I would have been doing. Oh, this looks like it's going to be a short, time to get short. Oh, it looks like it's going to be a long, time to get long. And I would have just churned and churned, which is the worst thing you can do. Worst thing you can do in trading. Clear negative divergence right now on 610 and 987. If we were to push up to the current high a day, from what I could tell with the way the BBs are printing, I would think we would continue to have negative divergence on a push back up. S&P, again, here's open of the day, here's current low of day. We do have positive divergence on the 2584 and 4181 at what would be low of day. Again, if you look back at the reference on those BBs, on the BB charts to today's open, the white vertical line, which in this case is to the left more, the more left white vertical line on each of those 3, that's the open of day. And if you look at where those BBs were at that point to where they are now, we are higher, while price is now exactly the same and potentially lower. So we do have positive divergence on 2 of the 3 here. And I'll tell you what, I'm going to take a long, and I'm going to start it with 1 contract, because on the downside, just want to see. Okay, so we're going to take 1 long here. Little aggressive, little ahead of normal entry procedures. Continue to have positive divergence on the 2 longer BB charts. And I'm going to be looking to get a second long on here. I'm not sure why I didn't get that, but they do make it a little bit more difficult to get filled on demo mode than on live, because they don't want you to get any fake fills. Certainly that's an order I would have been filled on live. That went in while we were offering the price I wanted. So, but that's okay. Oil, in the meantime, I have my pending order to take a short up here. Still have negative divergence on the 610 and the 987, so I would be okay with getting into a short up here. And on the S&P, That's about all I'd be looking for at this point. We are in at the average of 78.75. We only have 2 contracts. So that means each point is a $50 per contract risk, so $100. So 3 points is what I'm currently willing to risk. So that puts me at 75.75. And we'll adjust that if it starts going in our favor or if we add in another contract. Again, oil negative divergence on 610 and 987. There's our first entry. We're going to put our stop up here somewhere for now. $15.97 is not showing negative divergence. I would certainly like that to be in our favor as well. But we do have 2 out of 3. I'm going to watch some order flow. I'm willing to scale into this as long as we continue to have negative divergence. I'd be happy to scale up to the 53.06, and if potentially even above to this swing. But let's see. The 1597 on oil certainly showing strength. I'd like to see that go away. Again, we have our negative divergence on two of the three BBs. What could very easily happen here is this: we could get a move down, consolidate, get this to turn down, turn back up, and come test current high day, giving us an opportunity to get into another contract. Well, we just kind of got to wait and see here. What time is it? Oh, shoot. I didn't realize what time it was. Oh, darn it. I really shouldn't have taken on trades here. All right, no big deal. Let me draw out a little bit of what it is we're going to watch for. And then, so actually in the S&P, we would be willing to take one more, just a few ticks ahead of our current stop. Okay, never mind. I'd rather go in my favor and not worry about it too much right now. All right, so what we're going to draw out here, and we actually still have positive divergence from the open to now. You can see that at the open of the BBs, where price was at the daily open right here, price was higher than we are currently at now. We're pretty much exactly as where we should be on the 25.84. The BBs have caught up with price. We do have strong positive divergence on the 41.81, but now it's just kind of a wait and see type of thing. So let me put in a profit target for oil. Unfortunately, I'm not going to be in front of the screen to be able to build onto this position, but that's okay. And profit target is going to be, we're going to stretch it out a little bit. Let me bring in our homework chart and kind of show you why I'm going to put it where I'm going to put it. So what I'm looking at is now the potential of a hold towards this end, the upper end of this distribution. Okay, and if we oh shit, I really want to get another contract on here. Hey, man, hang on. I'm taking another short here, scaling in above this value area here. That's why average entry is even. Okay, so we're at pretty good risk here. This is really looking to push. Oh, wait a minute. Actually, this should be here. Okay. We can see the oil is really trying to push here. Still negative divergence on the 610. 987 is, I'm going to call it flat, so technically in our favor. 1597 certainly not that is continuing to push and show strength. Okay, so anyway, let me get back to what I was showing you, and then let's see if I can actually do that, because I do got to get out of here. Okay, so what we're looking at is, if we can fail towards the upper end here, we are expecting a push back down towards the high volume node of the composite and this micro composite. We also have VPOC from yesterday that we're going to use. So let's show you where we're putting profit targets, since I won't be in front of the screen to mess around with this. All right, what do I got here? Okay, good. First profit target is going to be ahead of the lower end of this consolidation. So this was what, 85? Let's call it 88. Profit target number one. Second profit target is going to be ahead of yesterday's VPOC. Let's call that 78. Okay. If I was in front of the screen for the rest of the day, I would actually be willing to move this profit target down towards this high volume node that we had tested a few times, but since I'm not going to be, I will leave it where it's at. Okay. Also, we would be adjusting our stop loss as things happen, but again, I'm not going to be in front of the screen to do it. Let's take a look at S&P and where we're going to place our profit targets there. One profit target is going to be at 80.75, and second profit target is going to be, and we're going to bring in the homework chart for this one as well. So let's take a look at what's potentially happening here. We've come down, we've tested the lower part of the gap here. I'm sorry, the upper part of the gap. It's held. So what we're looking for now is, you'll see I have one profit target ahead of yesterday's VPOC, actually right on yesterday's VPOC. I'm going to put my next profit target up here at the high volume node of the upper end of yesterday's distribution. I can tell you now, if I was in front of the screen, I would probably put this quite a bit higher and then deal with it if we came to it, because I think if we are able to push back up into yesterday's range and stay there, and I'm sorry, into yesterday's value and stay there, the way the S&P has traded, you can see here how many days we go from one end to the other, one end to the other. So I would be, if I was in front of the screen, I'd be willing to move my profit target. In fact, you know what? Let's do that. Let's come towards high volume node of the very upper end of yesterday's. That's good right there. So I'm using this high volume node at the very upper end of yesterday's volume profile as our second profit target. Again, we would adjust things and move our stops as things would move if we were in front of the screen, but we're not going to be, and I hate to do it to you guys, but I do have to run. We'll see how these trades play out. All right, guys. Have a great day. Call, text, email, send smoke signals, whatever you want. If you have any questions, jot them down, and then obviously if I can, I'll always try to do it with you guys at night. But if not, I'll do it in the videos now. All right, guys.